Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we will take a look at the euro currency. Today, actually, to be honest, guys, it's really not really big difference what particular currency to look at, because at the eve of the Fed meeting, hardly we will see any significant action. Since we have really interesting discussion now in our weekly research on the currency wars, and that right now this is will be real central bank race for a negative territory. So the European Central Bank, Bank of Japan and Fed will stand under the pressure of the mutual easing policy, some mutual dovish policy on the currencies, because every central bank would like to get better opportunities for their own economy on the third party account. So they will try to put the burden of the expensive currency on its partner, and we already have seen the really diverse steps from the European Central Bank. So as a result, if you have read the recent or maybe you heard the recent statement from the Bank of Japan, they have eliminated the phrase on more rate decreasing if it will need from its statement. So as they have seen that the European Central Bank have decreased the rate, they have taken the pause because they need to see what really will happen with the economy, and they would like to save some room for the further rate decreasing in the future. Now the ball stands on the field of the Fed. So what Fed will tell, what Fed will do, because in the current environment, when the United States economy already makes the first steps on the recovery, or at least it seems that it makes the steps on the recovery based on the statistics that we have from the United States on the consumption and the employment, it really could be a really significant impact if currency again will become too expensive, and this could really make the negative impact on the domestic economy. So right now it's very interesting what the Fed will do, how it will respond on the really significant easing programs on Japan and in Europe. It's really currently, guys, it's really very interesting times when we will see the struggle of the central banks, and it will be not just interesting to see how market will move, what we will see on the charts, but it's also very interesting to see what central banks will do and how they will compete to each other. So in this policy to protect their own economies, really, guys, very interesting. So from the technical point of view, we have come to conclusion in our weekly research that market stands at a very important moment, because if market will fail to continue move higher, it could turn to the downward action, drastic downward action, and from that standpoint, it's very interesting what the Fed will do and what will say in the common meeting. Because if market will raise this thrusting action to the upside and taking out of these lows from 108, it really could start to rally down, drop to the parity, because this could really start this butterfly. From the other point of view, this rally to the upside that has happened on the European Central Bank meeting, it's really significant action. Even on the daily chart, market stands above the monthly pivot point. And what's more interesting, it has formed a grabber. This large, long ranged candle is the bullish grabber that suggests the taking out of this top. if this really will happen, if market really will continue move high above this top, then we could return back to the discussion of this, just a minute, I will show you, of our A, B, C, bottom, D pattern, and we will return back to the more extended targets, 1618 extension of this A, B, C, D. But for this purpose, market first needs to move above the equal pivot resistance one, and what particularly interesting is above this top. Only in this situation we will be able to talk on the further targets to the upside. Meantime, market stands inside this big range, okay, and usually, guys, the big ranged candles play a special role because the extreme points works as some kind of the barriers, and if market abandons the range of this candle, it usually moves in a direction of the breakout. So this is the first feature of the long-ranged candles. The second feature is that these candles usually holds price action for the long period, for a considerable period of time. So for example, you could take it here. So they approximately have the equal length. So take a look at the length of this candle, just even could measure it, this one and that one. They really stands very close to each other. It's this candle slightly longer. So in it, you could see thrust up, then market stands inside of the range of this candle for long period, for 3-4 weeks in a row. Market stands inside. When the breakout take place, market has moved in a direction of the breakout approximately the same length as the candle stands. Take a look. This was the breakout, slightly lower. It's just has completed ABCD target to the upside. This the features of this candle. So here we could get something of that sort. So market could stand inside the range of this candle for a considerable period of time. This very often happens. It doesn't mean that it definitely will happen, but it really happens very often. So it also will depend what Fed will say. If some drastic steps we will hear today, or but say tomorrow and on Thursday, then surely market could leave this candle faster. But we will see what will happen. Until market holds above this top, above these lows, the chances that it will continue to move higher will hold. So currently, guys, since market right now stands in the contraction step, in the contraction phase, we just right now could discuss only possible retracement inside of the body, what really market could reach, what levels. So on the 4-hour time frame chart, the first level that we will be watching for is the 1060. This is a weekly pivot point that has been tested yet, and this will be the first fib level, 1066. 50% support stands at 1020. We know that the euro currency likes the 50% levels. What is also interesting, guys, that is if you take a look at the hourly chart, you'll see that current ABCD pattern, if we'll take a look at this ABCD retracement down, the CD leg stands flatter than AB, and it means that market has less chances to reach 1618 extension. But take a look at the both targets as 100% extension, as 1618 creates the agreements with the fib support. The first fib support is 1066, creates an agreement with the AB equals CD target. The 10970, the 618 support of this thrusting candle, creates an agreement with the 1618 extension of this ABCD. So that's will be a very significant supports. Right now, as you can see, we have some minor bullish divergence here, hidden divergence, and that explains this minor upward action. But here, guys, I suggest that probably market will form here some minor reversal pattern. So because if you will measure this extension, you will see that 1618 of this retracement up stands also at the same area. So maybe market will form here some kind of the butterfly or something of that sort, minor butterfly on the 15-minute chart, maybe on the 5-minute chart, that will let market to complete the 100% extension of this ABCD pattern. So as you can see, this is really minor setups right now in the markets, and all that we could discuss right now is just the depth of the retracement. at the eve of the Fed meeting. So action is really very choppy, as really signs of the retracements. No thrusting action here. So nothing really outstanding is going on right now in the euro currency market. Just waits for the Fed. So let's keep watching what really will happen. If you would like to take the long position based on daily grabber here, and you expect that market will break it to the upside, and watch for the retracement, watch for the targets. Maybe you will apply here this scale in. So take small part of the position here, then wait for the Fed, what really will happen. Maybe on the volatility you will be able to take some part position here and position yourself for the possible breakout. But personally, guys, I think that it will be better to take position after breakout will happen, when the market already will out of this range, and after that take the minor the position on the minor retracement. That will be just safer, because while the market stands inside of this range, it's uncertainty, because you do not know in what direction market will show the breakout. Recall our discussion in this range. What we said first, we said that market should show breakout to the upside. When we have seen this upward action, ABC retracement, we said, well, this is normal, so probably we should expect move up. When the market stands long time here, we have seen some grabbers that have been formed here, and we said, well guys, something is wrong, because market stands too long here. And only when we've got here some kind of the hand shoulders, only after that we've got the clear signs that upper breakout will happen. That's why the market stands long time inside of this range, inside the range of the candle. It's every time is uncertainty. That's why taking position on the breakout, after the breakout, and on the intraday charts in the current situation will be just safer. But this choice is up to you. Will be so maybe taking position here on some retracements inside of this channel, inside of this range, also is the possible tool that you could apply for possessing on the long side of the market. If you would like to take short position, this definitely, guys, will be better to wait when the breakout will happen, because you need to wait when the market will cancel the bullish patterns, and this will happen only if the market will drop below 108. Besides, the potential target of this butterfly is very significant. It's more than the 700 pips, so that's why you just do not need to hurry, because you will have a really significant room for taking position and a lot of time for getting the profit if market will drop below 108. That's why in this scenario it's even more reasonable to wait when the breakout below 108.